Well, as I said, it was a flat trading session with some bit of selling coming during the cash session, with the Nifty falling 0.3% ahead of the weekly expiry on Tuesday, and we've seen good amount of rollovers also happening there. For the Nifty futures and options segment, you have the Nifty August futures, seeing an open interest build up of nearly 0.5%, with the Nifty down nearly 1/3%, premium at 98.25. So that gives you an indication of the kind of bounce that we saw from early fall today. Nifty Bank again absolutely flat. The open interest is down nearly 1.73%. Some shorts getting covered, but at the same time we're seeing some rollovers happening to the September series, and that augurs well, because we are just 6-7 days away from the August expiry, which is the monthly expiry there. Look at the bank stocks. In the morning, almost all banks were in red, especially the private sector banks, but we've seen some shorts getting covered in the August series there. So SDFC Bank, Kotak, ICICI, Axis, seeing some long build up coming in towards the last 1 hour of trade in the banking pack. But call and put writing has been the most aggressive. We started off with a good call writing coming in, but towards post 1 p.m. we saw put writers being aggressively pushing the call, and we saw 24,200 adding significant amount of open interest for 25 August or monthly expiry series there. And if you look at the distribution, it still gives you an indication of that we're still in a range of 24,000 to 24,500, with some support coming at 24,200 in today's trade there. But gainers include Inox Wind, where we have seen some short covering happening. Motilal also saw some shorts getting covered. Oberoi Realty is seeing some long build up, and if you in the losers pack, Voltas saw some short build up. Vodafone Idea short build up, and BSE down 2%, but seeing some short build up in BSE as well. But open interest gainers included Voltas, Oberoi Realty, Info Edge, all seeing some open interest build up coming in, handsome gains in the open interest for them. But in the losers pack, you had MCX, where we have seen some short covering. Motilal saw some short covering, and Hindalco saw some short covering. So overall it was a day which is very flattish, with some interest coming in the cash session of the NSE. And as you go into tomorrow's expiry, it's interesting to note how the market is going to do. But if you look at the cash session as a whole, the total turnover in the cash session was around 990 odd crores, so much lower, a low turnover day as well in the cash session. So the liquidity is still building up in that session there for that. But now let's look at what's coming up. So let's go to Sunidhi for all the cues to watch for tomorrow.
Here are the key events and developments to watch out for before the upcoming trading session. Starting with India, the key event to watch out for is the weekly Nifty expiry, which could keep the markets a little volatile. Globally, in the United States, markets will track the industrial production data and import-export prices data, while the UK will release its unemployment numbers. Moving on to corporate actions and board meetings, Kirloskar Pneumatic is set to consider a stock split in the ratio 1:2, while Balkrishna Industries and BPCL are mulling a fundraise. In IPOs, Milky Mist Dairy Food is set to list, while Sunshine Pictures and Sankesh Jewelers IPOs are going to open for subscription. Among other events, the BRICS Environment Ministers meeting will take place in New Delhi. Tata Sons will hold its AGM, while the ECB chief economist Philip Lane is scheduled to speak.
Thanks, Sunidhi, for the stocks to watch. So it's going to be an interesting Tuesday coming up. But joining me now is Rudramurthy BV. Rudra, thank you very much for joining us. We saw some volatility coming in this last 1 hour, 1 or 2 hour of trade, where we saw some shorts getting covered for some of the banking pack, especially private sector. What's your take on some of them?
Sajid, good evening. Thanks so much for having me on the show. See, overall, definitely Nifty Bank has outperformed Nifty, and you're seeing this because PSU banks are outperforming, and also except HDFC Bank, even private banks are doing good. So, if you give me a choice to buy from the banking sector, I will be preferring PSU banks over private bank. And yes, names like for me PNB and even Bank of Baroda, they all look very strong on chart. So, if I have to buy from the banking pack, I will prefer PSU banks, and definitely in that Union Bank and PNB looks the best. And if you have to buy private bank, I will still avoid HDFC Bank, and I will be looking at only ICICI Bank as the best buy from private bank. Yes, NBFCs are also doing very good. So even from NBFCs, if you have to pick stocks like Shriram Finance look good to me. Even after this small correction, what you have seen in Bajaj Finance, that also looks a great entry point for me. So if I have to buy from the banks and from these financials broader market, I will be looking at some of these NBFCs and PSU banks as the best buys.
Also, if you can look at some of the defense stocks as well, how do you look at some of them? BEL, HAL. HAL was very active today in the options market as well.
Sajid, definitely defense, even after the kick up what it got from Modi's speech, I really said defense has a long room to go even from here. And I will be buying HAL even at current market price. And yes, on dips, it's a great entry point. If you can get it closer to that 4,800, 4,900 zone, that is a good entry point. But even at current market price, I'll be a buyer in HAL. I'm very bullish on defense as a theme. HAL followed by even BDL and even BEL. Both Bharat Dynamic as well as Bharat Electronic looks good for me. So in the same order, first I will be looking at HAL, followed by BDL and BEL. Yes, overall defense as a theme can do very, very good even from here. And these three names, HAL, BDL and BEL, are the top three picks from the defense pack.
And some of the most active stocks today were basically some of the stocks where the earnings were disappointing. Schneider Electric was one of them. How do you look at that?
Definitely an avoid in Schneider Electric at current market price. In fact, even after this gap down, whatever we have seen, plus the result reaction, I will avoid Schneider, and at current market price, definitely not to buy this dip. Wait for some more correction. Let some change happen in terms of their quarterly numbers. I will not catch this falling knife. Let it just come closer to those 1,000 levels, and let's see the price action there and then look at an entry. But at current market price, definitely an avoid. Or if you have with you Schneider, just sell on rise will be my strategy.
The other one would be Zaggle, 20% down in today's trade. Again, earnings
100%
disappointment.
avoid, and I won't touch that stock at all. So definitely both of them are avoid from me, Sajat.
Let's look at some of the big ones in from the index. Metal pack. How do you look at Hindalco or Nalco?
Sajat, I'm very, very, very bullish on metals as a theme. From current market price, there is long way to go. And in fact, let me tell you, among the sectors which I like, on the top one and two, it will be the platform and new age stocks which I like. And the second is metals. And especially in metals, names like Hindalco, Nalco, and even Tata Steel looks very, very strong to me. I will be a buyer in all these three stocks, that is Hindalco, Nalco as well as Tata Steel, even at current market price, and on dips accumulate that, they will give you a good move from here. So all three available in futures. One can definitely even go long in future. Hindalco at current market price looks fantastic to me. Look at targets of 1,100, 1,150 to come. One can have a stop loss of 1,020 and look at buying Hindalco, and followed by Hindalco, Nalco and Tata Steel are my preferred stocks. So metals as a theme can do very good. And even from new age and platform theme, I like a lot of stocks. See the move which has already happened in Paytm, Nykaa. They're all very strong on charts even at current market price. Any dips you get in Paytm or Nykaa will be a good entry. And Eternal at current market price looks very strong to me. I will be a buyer in Eternal. So for me, even new age and platform stocks as well as metals both look very, very good to me to enter here for a positional long trade.
Realty was the, I think, sector of the day. It's up, but within realty, Oberoi, Godrej Properties, and Phoenix, these three stocks, rising today and taking the entire index up as well, the realty index.
So yes, for me, Oberoi, if you see for last 3 days, the price action has been positive and volumes also are supporting this up move in the price. So I will be a buyer in Oberoi Realty. Yes, it has given a clear breakout to you at around 1860 zone. And today you are seeing that move on the upside with volume support. So this stock will definitely go back to its all-time highs very soon. 2000 will be on card in Oberoi Realty and further move can be seen. So I will be a buyer in Godrej Property also, but first preference will be for Oberoi followed by Godrej Property.
The other one being Phoenix. Do you look at Phoenix as well?
So Phoenix is also a good stock from the real estate pack if you want to buy, but I will be picking up the two names Oberoi as well as Godrej Property first, followed by Phoenix.
The worst hit sector today, Nifty IT, Rudra, down 1.75%. How do you look at some of the IT companies? We saw some run up happening a few weeks, but is this a profit booking trend which is coming in now?
Sajid, I'm very clear when it comes to IT, you have to be very stock specific and very, very choosy. The entire sector may not do good, but still if you see names like, for example, Coforge, Persistent System, or even for that matter, see even Endurance Technology, these are some of the names where you have relative strength. So if you want to be in IT as a sector, you have to be very choosy, and some of the names which I told from IT pack, only they can do good and you can remain long only in these specific names.
Rudra, any picks you have for tomorrow?
Yeah, so for me, I'm picking from the new age and platform theme where I'm very bullish. Eternal is one stock which at current market price I will be a buyer. And if you see the price pattern and even the consolidation which is happening at around 310 to 320, that shows clear accumulation happening in this stock. Stock can move towards 350 to 380 zone and one can definitely buy at current market price. Have a stop loss of 305 on a closing basis for this long call. And for me, the second stock which looks very good is Manappuram. Yes, the stock is currently in ban. You can buy it only in equity delivery. And then yes, once it is out of ban, even it is available then in F&O. For me, Manappuram has made a very strong base and it is now consolidating. Results were also very good. So I will be a buyer in Manappuram. At current market price, buy in equity. Look at initial targets of 380 and then even 400 possible on Manappuram. Keep a strict stop loss of 335 on closing basis for this long call. So buy on Eternal and on Manappuram.
Thanks, Rudra, for those picks and also giving us some, levels for some of the stocks that were active in today's trade. Thanks for joining us today. We'll step into a small break and we'll come back with more on Markets Edge. Welcome back. You're watching Market Edge, and it's a week of IPOs. Nearly 6 IPOs are coming in, with 2 which have already opened today, which includes Lalita Jewelries and Horizon. Merrill has the details on the list of IPOs that's hitting the market this week.
That's right. It's quite the action-packed week that we have lined up ahead for the primary markets. We've got about 7 IPOs opening for subscription, about to raise almost 7,000 crores in primary capital. The action kicks off on Monday with Horizon Industrial Parks and Lalita Jewelry Mart. Horizon Industrial Parks is, of course, backed by Blackstone and is looking to raise up to 2,600 crores, making it the largest IPO of the week. The company is an industrial and logistics infra developer developer as well as an operator. Also opening on the day is Lalita Jewelry Mart. It's got an issue size of 1,700 crores and it has upwards of 60 stores across South India. The proceeds of this issue will be going towards adding more 10 stores across India. On Tuesday, Shankesh Jewelers and Sunshine Pictures IPO will be opening, sized at 367 crores and 282 crores respectively. Shankesh focuses on customized gold jewelry, while Sunshine Pictures is a Mumbai-based film and content producer known for titles including Force as well as The Kerala Story. Wednesday brings us Gaja Alternative Asset Management with a 550 crore IPO. The company operates as Gaja Capital and is a private equity and alternative asset manager. After its listing, it is going to be one of India's very first private equity company, which is going to be a publicly listed company. Then on Thursday, we've got Tempsense Instruments India opening its 650 crore IPO. The company makes temperature sensors and specialized cables, and it also exports to over 75 countries globally. It's also got a market share of upwards of 10.5% in temperature sensors in India. Finally, Augment Enterprises is going to be opening on Friday with an 825 crore issue. It's going to be offering exposure to bullion trading, digital gold, and also jewelry manufacturing. So do watch out for all of these 7 IPOs set to open on the exchanges in this upcoming week.
Thanks, Meryl, for that update on the IPOs coming out or opening this week. But let's look at some earnings where the weaknesses have been there for some of the companies. It was a weak quarter for Satvik Green as PAT, revenue and margin missed street expectations. Management to focus on leveraging strong order book and expand customer base. Sunidhi is here with more details.
Satvik Green has posted a weak Q1 for FY27 with revenue down 44% year-on-year to 511 crores, while EBITDA fell by 81% to 34 crores. EBITDA margin dropped sharply to 6.6% from 19% earlier, and profits declined 95% to 6 crores. The weak quarter was mainly attributable to lower production and sale volumes, pricing pressure, higher freight and input costs, and delays linked to ALMM procurement. However, the order book remains strong for the company and stands at around 6.35 gigawatts worth around 8,200 crores, providing 12 to 18 months of execution visibility. The key growth driver going ahead is going to be the Gopalpur facility with 4 gigawatts of module line in trial runs and 2.4 gigawatts of cell line expected to ramp up shortly. Going ahead, management has maintained its FY27 guidance of 3.5 to 4 gigawatt sales, 6,000 crore revenue, around 12% EBITDA margin, with margin improvement expected from the second half of this year as in-house cell manufacturing ramps up.
Thanks, Sunidhi, for that update on Satvik Green. The rupee was under pressure after the Reserve Bank of India shortened its NRI FX swap window by a month. The currency slipped to 95.6 per dollar, while importers' demand and higher oil prices add to the pressure. RBI intervention is cushioning the fall. Meryl is here with more.
Right, so the rupee is back under pressure, weakening about 0.2% to 95 rupees and 60 paise against the dollar, hitting a 2-week low. The trigger is that the RBI has shortened the NRI FX swap by about 1 month, a move that has surprised the markets. Remember, the scheme had already attracted more than $50 billion, and Bank of America estimates that total inflows could potentially reach around $80 billion. So any curtailment now raises concerns over future dollar inflows and rupee support as well. This comes despite earlier RBI commentary suggesting that there was no immediate plan to shorten the window, and at the same time, importer dollar demand is also adding to that pressure. While the RBI is likely to cushion the fall through intervention, including dollar sales via state-run banks. The pressure is also visible in the forward market. 1-year USD INR forward premium has now risen by 8 basis points reaching up to 2.79%. The big risk now to watch remains crude oil. Brent is hovering near that $88 per barrel range, and higher oil prices could now widen India's import bill and put further pressure on the rupees thereby. The silver lining, however, is that the dollar index is softer at around $99.4, while stronger Asian currencies are providing some support as well. So for the rupee right now, it's a tug of war between RBI intervention and external pressures, with crude and dollar inflows both remaining key variables to watch ahead.
Thanks, Meryl, for that update on the rupee. But another company which was in focus and was weak in trade today was Schneider. It was a weak quarter for Schneider Electric as profit more than halved on a year-to-year basis, impacted by raw material volatility. Sunidhi is here to give us a wrap of what the earnings were.
Schneider Electric reported a weak Q1 for FY27 as all its key numbers came below the street's estimates. Revenue grew by 5% for the company, coming in at 651 crores, but EBITDA fell by 51% to 34 crores, with margins down sharply by 600 basis points to 5.2%, which was earlier 11.2%. Its PAT numbers declined by 70% year-on-year to 12 crores. The main concern during this quarter was profitability, as commodity price volatility and delayed pass-through input costs at legacy orders for the company impacted margins. However, revenue growth was also moderated during the quarter due to project execution cycles and phased order conversion. On the positive side, however, order intake was healthy and stood at around 915 crores, driven by strong demand from data centers and semiconductors. The order book was also healthy and it stood at 2,169 crores, up 33% YOY, providing good revenue visibility going forward. So going ahead, management commentary on margin recovery and order execution will be key for the company.
Thanks, Sunidhi, for that update on Schneider. That's all we have for you in Market Edge today. We'll see you tomorrow at the same time. Thank you very much for watching, and from all our team here in ET Now.